It's absolute mayhem in mainstream markets, with the US stock market losing over $10 trillion since President Trump's inauguration. Dave Portnoy is down $7 million just today. Old Davey day trader in absolute disbelief. Reports from the White House are coming out that Trump simply does not give a f*** anymore, and California begging for China to exclude it from retaliatory tariffs, all while people beg for the market to be closed because it's getting so bad in mainstream markets. But something truly incredible is brewing as Bitcoin and crypto are up on the day, decoupling from the stock market in a way that we haven't seen in a very long time, leading us to ask the question, is crypto the asset class that benefits most from a global trade war? And most of all, is the Bitcoin bottom in? And is it time to start taking contrarian long positions, anticipating the next few moves in this global economy? Now, in the last episode, we talked about how even the Federal Reserve, with 2,000 economists, has no idea which direction the economy is going to go.
Well, what we've heard and what I've heard is that we don't really know where the economy is going to go.
And the mainstream economy is starting to truly feel it. Tariff hatred is everywhere.
I'm down $7 million in stocks and crypto. Trump has put his tariffs all over the place. I've been trying to understand them. I don't. It's more a trade deficit tariff to me.
Now, contrary to what many people believe, Trump is not just jumping in to save the day here. In fact, reports are coming out from White House officials that President Trump doesn't give a fuck, and that is a verbatim quote. No, many people expected Trump to immediately back away from his stance on tariffs, and as we'll show you today, I don't think he's going to be doing that just immediately. In fact, we'll lay out for you our opinion as to what happens next in the global economy here, because it's starting to be clear that Trump actually has a much bigger plan with tariffs than I think a lot of people realized. Things are getting so bad that even California Governor Gavin Newsom is begging for California to be exempted from tariffs. I don't think they're going to have a lot of luck with this. But it is really important to understand that cheaper prices on assets is always a good thing, because eventually we know what happens with the global economy. Money needs to be borrowed, red lines that get crossed need to be uncrossed, and eventually these things will go up against the worthless US dollars. But I think it's important to realize what's going on behind the scenes, because there is two games being played with Trump. First off, there's the obvious game where he really wants to bring manufacturing jobs back to America. He believes he can do it. Whether or not he'll be successful or not is a different question. I'll leave that to people who are experts in that field. That is certainly a stated goal of Trump, and I think he's very serious about that. But beyond that, we know the game behind the game is about getting interest rates lower. And we've actually just had an update of this interaction between Jerome Powell and President Trump. Trump said 10 minutes ago, Fed Chair Powell is always late to cut rates. Cut interest rates, Jerome. Stop playing politics. So you can see Trump wants some relief here. He wants to force the Fed's hand. And Powell just came back and said, nope, it's too soon, far too soon to determine the appropriate policy path. But remember what Bostich said? That when they do react, because they're purposefully waiting for things to get worse or way better, they want to react in a big way. So whenever they do determine the direction, they're going to overcompensate with their reaction, AKA the Fed sledgehammer of liquidity is coming. Whenever it does get enacted, it's going to be big, but it's not going to happen for a little while. Now, it's important to realize, as much as mainstream markets are looking absolutely atrocious, there hasn't been signs of true capitulation yet. As Kobayashi letter says, the VIX hit 45 today, and the stock market is already down 10 points. It's actually not that high on the historical readings, which means we have not seen capitulation yet. There is a lot lower to go on stocks before we can truly call for capitulation. Now, of course, a lot of people are saying, hey, look, this is simple. The script is so obvious. Get rates down to sub 3.5, refinance the debt, initiate QE, roll back the tariffs, refinance the debt at 3.5%, tech rips, stocks up, see you in 26. So long only Larry is saying this is a simple playbook. All you got to do is wait for the pivot and buy the rip, Wait for us to get a little lower. Jerome Powell pivots, up only, baby, up only. I think he's sort of right, but I think it's important that we actually digest a few more aspects of this. And these other aspects I think are actually quite interesting for crypto as things have started to shape up. First of all, let's go to a Chamath post here. The language of Trump's post here is very important. He's saying that he just had a productive call with To Lam, the general secretary of the Communist Party of Vietnam, who told him that Vietnam wants to cut their tariffs down to zero. So they want to remove all tariffs if Trump removes their tariffs. If they're able to make an agreement with the US, he thanked him on behalf of the country and said he looks forward to a meeting in the near future. You get a complete removal of all tariffs and you don't just immediately say yes, you say, okay, we'll talk to you soon. What does that feel like to you? Well, it feels like to me that Trump is waiting for something even bigger, that he's not just going to give in as soon as he gets a little negotiation back, because that would actually send the wrong signal globally. As Chamath explains here, he has wanted tariffs for 40 years. Trump, you can find footage of him talking about tariffs forever. Why would he take them off the table just a few days after getting his way? He wants to keep these conditions on the field and see what happens to build leverage. He interprets this as that he will take his time to do deals. This will also have a side benefit, and this is what we've been talking about. This side benefit, I think, is the biggest thing that we should be looking at. He will force foreign buyers to show up to our upcoming treasury auctions. Because if a foreign central bank abandons the auctions, you can reasonably expect that Trump will put that country at the back of the line to resolve tariffs. Remember, tariffs are a stick. They are a bargaining tool, but this is not a fair bargain. You have a totally tilted table where these countries need American buyers. It's an existential risk that they have them. And that's why the American equities have been dumping like crazy, because American stocks are highly dependent on cheap foreign labor to sort of source and create these insane profit margins. That's why Nike has been pumping and dumping like an absolute coin over the last few days. And as proof of this, we see Nike pumping like crazy into the announcement that they wanted to remove tariffs. But of course, Trump not buying into this just immediately shows that maybe this is a premature reaction. And I think it's important that we pay a little bit of respect to what's happening here and understand that this might not be a quick resolution. We might not see a resolution to this very quickly. The White House has come out and said, pretty much in so many words, they're purposefully crashing the markets. They don't give a fuck. Economists, he's purposely crashing the markets. Trump, I'm purposely crashing the markets. It's probably a negotiation technique. I mean, yeah, it's probably a negotiation technique, but I think oversimplifying it as like some art of the deal mafioso thing is way too simple. Trump really wants to reshape global trade, and as part of the deal, he's going to renegotiate, but it's not as simple as drop your tariffs and we'll drop ours. Trump is looking for something much bigger, much bigger. Now, just listen to what Scott Bessent said about this as recently as yesterday.
And if countries retaliate, which some have said that they would, some have said they wanted to wait and see, what is the White House's response going to be to those countries?
Well, Caitlin, one of the messages that I'd like to get out tonight is everybody sit back, take a deep breath, don't immediately retaliate. Let's see where this goes, because if you retaliate, that's how we get escalation.
And then it becomes a full-fledged trade war in your view?
Not a trade war, depends on the country, but remember that the history of trade is we are the deficit country. The deficit country has an advantage. They are the surplus countries. The surplus countries traditionally always lose any kind of a trade escalation. So I did, as a student of economic history or a professor of economic history, I'd advise against it.
So you're essentially saying that they should not retaliate?
I would say that doing anything rash would be unwise.
Doing anything rash would be unwise. Again, you can see that this is not just a first position, but that Trump and Bessent are really willing to push this a lot further than probably a lot of people are estimating. And that is a hidden factor here, because their ultimate goals here are to put America in the driver's seat of every trade negotiation, of every international relation. And that is going to put serious strain on international trade while they work out the kinks of this new agreement. They're trying to create an entirely new social contract with the rest of the world, one that favors American laborers in the process, which is not an easy thing to do. And so for those calling for an immediate cessation of tariffs, I think they're in for a much longer journey here, as there are quite a few big bumps to get over before we get there. Now, obviously, we know where this is heading eventually, as the markets will start collapsing here. There will be so much strain on specifically equities, but also other areas of the economy as consumer sentiment drops, as consumer behavior drops, aka they're going to print so much money, as Scott Melka here says, and of course this is echoed by Geiger Capital. But this brings up the question, normally when equities get crushed, people hop into the ultimate safe haven asset, the US dollar. Of course, we know the US dollar goes down slowly over time. There's, inflation, it maybe loses, 50, 60% over a 50-year period or something like that, a couple of percent per year. But overall, cash is the safest usual position, right? It doesn't have the same volatility as, for example, the stock market. It won't go down 10% in a day. Or will it? That's right. This is the US dollar index. And as you can see, we called that this was a deviation similar to in 2021. And as you remember, several months ago, actually now, we called this deviation of US dollar exploding into January as a false breakout, and that we'd probably see it reverse. And as you can see, we have sped run this. In fact, the speed of decline here is absolutely insane. And we're seeing the dollar fall back to significant support territory, down 8% on the global index in just the last few months. So let's ask the real question here. If stocks are down and they're not jumping into US dollars, people are not pulling their money out of stocks and jumping into US dollars, where does the money go? Because the money needs to go somewhere. And believe it or not, it's not going into gold, as gold is also having a horrifically red day today. Oh yes, you know where we're going with this. This, my friends, may very well be Bitcoin's first real example of being a risk-off asset, of being a safe haven. I mean, think about it. You can't tariff it. It doesn't have earnings. It's not going to lose revenue. It's international. No one can control it. No one can take it from you or tariff it if they wanted to. Bitcoin's time to shine very well might be right now. Again, I'm not going to go out and say for sure the bottom's in, but Bitcoin is showing incredible amounts of relative strength today while everything else is a house on fire. In fact, Bitcoin has officially broken its correlation to the S&P 500. As you can see on April 4th here, it has a negative correlation, whereas it had an insanely high correlation over the past few years. It's got the first negative read down here, April 4th, 2025. We also see Scott Bessent coming out and saying, hey, look, Bitcoin is becoming a store of value. Listen to this.
It was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, that there are a lot of different stores of value over time. Bitcoin's becoming a store of value.
Mr. Bessent is telling you that these tariffs are going to go into place and protect America. He's also telling you, hey, look, people are buying gold. People are buying Bitcoin. The writing's on the wall here of where they see Bitcoin sitting in the international strategic game. Remember, while all of this is happening, they're pushing for a Bitcoin strategic reserve. They're pushing for Bitcoin to come onto the national balance sheet and to represent the value of the American worker. And as Arkham here shows, Trump tariffs, stock market down, but BlackRock is buying BTC, meaning BlackRock's clients, the smart buyers, the wealthy elite, they are buying Bitcoin. I think this take from Good Alexander really sums it up. Oh wow, I can't believe this open source, capital flight sensitive asset secured by ASICs around the world with no tariff sensitivity, yet alone earnings, is decoupled from the stock market during an event that collapses equity earnings and drives capital flight. Seriously, just quit. Now, of course, this is what we've always wanted from Bitcoin, to essentially be a capital flight asset. When shit is hitting the fan everywhere, jump into Bitcoin. That's what we've always seen it as, because it cannot be tampered with. And of course, it's backed by an energy network. It's backed by hash rate. It's not backed by earnings. This is one of the most interesting of times for Bitcoin, because if Bitcoin decorrelates here and is able to fully decouple, again, we've heard of the decoupling so many times that it actually is getting gross. It's sickening. But if it starts happening, this would be one of the biggest bull cases we've ever seen for Bitcoin. We need to see it play out. Of course, we need to see more evidence, but it's also possible that Bitcoin simply front ran this. Remember, Bitcoin's already down 30%. The stock markets are only down maybe 10, 12% from the highs. Bitcoin was way ahead. And that's one of the benefits of Bitcoin, is that it front runs liquidity. It moves before everything else because there's absolutely no safeguards. So could it be moving back? Could it be predicting the bottom of this entire move? And could it be sniffing out what's next? Remember GameStop when they announced just a few days ago that they were going to be adding billions of dollars of Bitcoin to their balance sheet? Yeah, well, while everything else is down, they're up almost double-digit percents. As Dylan LeClaire says here, no supply chain risk, no jurisdictional risk, no earnings risk, no debasement risk, no credit risk. It's hard not to love Bitcoin in a world where absolutely all of these things will get crushed by tariffs. In the words of Michael Saylor, inflation is just the tip of the iceberg. Capital faces dilution from taxes, regulation, competition, obsolescence, and unforeseen events. None of these things affect Bitcoin, but they certainly affect Apple stock. They certainly affect Google stock. They certainly affect Tesla stock or automakers that actually need to build and produce products, whereas Bitcoin exists as a store of value in cyberspace. And that really brings up the question, because we're on the verge of seeing a true collapse here in the housing market. I know a lot of people are expecting housing to go up when rates come down, but actually there's been what's called a lock-in effect, where because of high rates, people aren't selling properties because they don't want to take on another high rate on their next mortgage. So as rates do come down, more and more supply will hit the market. And that whole generation of baby boomers that have ridden the essentially most exceptional wave of real estate growth in the history of the world will all be looking to kind of exit their bags at what they feel like is an insane insane multiple. But what happens when an entire generation does that en masse and the future generations are simply not well off enough to take on that supply? What happens with dwindling populations where there's more 70-year-olds than 10-year-olds? Is real estate really that good of a store of value? Or has the baby boomer generation simply been using this as a store of value in lieu of not really having anything else? We're going to talk about this entire dynamic on a future episode, but we could be witnessing the beginning of Bitcoin's store of value narrative displacing other asset classes, which is not just worth Bitcoin getting back to its all-time highs, but this is the path for Bitcoin to get to the hallowed land of $500,000, $1 million, and eventually multiple millions of dollars per coin. As Will says here, deglobalization and heightened geopolitical tensions are bullish for the medium to long-term outlook on Bitcoin. Now, it's important to realize, I think the key part of that is medium to long-term. So the question is, what do we do? Is it time to all in here? Is it time to buy? Because since Trump's inauguration, we've heard the most insane bullish news that we've ever heard in the history of our time here in crypto. The friendly SEC, banks now engaging in crypto, stable coins coming en masse, going to bring trillions of dollars onto the blockchain in a compliant way. And now you're hearing Fidelity saying, hey, you can actually invest your retirement plan, allowing for their customers to invest their retirement into crypto. This is insane. Do you realize how much money is in retirement accounts? It is insane how much money is in those. But there are two things happening actually structurally in Congress that should be resolved soon, according to Coinbase CEO Brian Armstrong. Take a listen to this.
This is really the most bipartisan issue in DC right now. Crypto, everybody wants to get legislation passed. And it's really exciting that we've seen both the House and the Senate take up drafts of the stablecoin bill. There's good parts of both. We're going to defer to them on how to work together and get something that the president can sign. And it's really exciting that we're not just seeing stablecoin legislation coming to fruition, but there's a lot of momentum on market structure legislation as well that helps categorize which of these crypto assets are securities, commodities, payment tokens, or some other thing like artwork. And the reason why this is so important is that over the last few years, this lack of clarity has pushed a lot of this industry offshore. America needs to be a financial hub, a technology leader. This needs to be built onshore, and we can only do that with clear rules. So it's great to see Congress finally stepping up and acting here.
So you heard Brian here. Two bills, one stablecoin legislation, that's their first priority, which will essentially make it so that any bank or probably regulated financial institution can create and deploy a stablecoin. That means trillions of dollars are going to come in the form of a variety of stablecoins, and that they're going to get the official green light. Sorry to the Tether truthers out there that have been waiting for Tether to collapse all these years. It's not going to happen. Secondly, they're going to have market structure, which means that all of these tokens are going to have to effectively pass a test to get the free trading treatment. They're either going to have to be full meme coins, probably with no utility, or they're going to have designated use cases. And what this will allow is for massive companies to pass real value through their tokens back to users, for those tokens to actually accrue value and equity through the token if they pass certain tests. This is insanely bullish for utility tokens, and it will probably create a moat of opportunity for the true builder projects out there. That's something I'm super excited about. And I believe DeFi, RWA, and hardcore utility tokens are going to absolutely fly after this bill is passed. It's going to create a big separation between the fake projects, the fake utility projects, the lower quality projects, and the higher quality projects. That's what we've been looking for, is a market structure bill, and it's coming. So it's time now for the $1 trillion question. Should we be buying Bitcoin and crypto now? Should we be front running this particular move and getting in at what could be the local bottom? Well, I'll tell you what, there have been times where it seems like Bitcoin is acting as a safe haven and is decoupling. But there's definitely some wisdom in being a little more cautious here, considering we know for sure that Trump and Bessent are trying to dump the economy. And maybe it's better just to wait until the markets are supported and not go further out on the risk curve, which is certainly where Bitcoin and crypto are. We also know the Fed is not coming to save us. They've made that abundantly clear. They are not jumping in to save the day at a 10% dip in equities. And Benjamin Cowan, who's been right a little bit too much over the last few months, has said usually when stocks fall and Bitcoin doesn't, everyone starts noticing how well Bitcoin is doing, and then people start talking about it. And shortly after, Bitcoin falls too. But nothing is as important as this clip, and then we're going to jump right into the trading advice. But check this out.
The distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt.
AKA, if you're in the top half of American households by income, by net worth, then yeah, these stocks might affect you, but really it's only affecting the top 10%. And the bottom half, the people who elected Trump, simply are not affected by this at all.
They have credit card bills They rent their homes, they have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right. Or that, I like the examples, and I was really struck by two different statistics last year. Summer of 2024, Americans took more European vacations than they had in history. Summer of 2024, more Americans were using food banks than they ever have in history.
So as we go into the trading segment, keep this in mind. These are the discrepancies that the Trump admin is trying to bring some kind of relief to. You can't have a world in which the top percent of earners are spending money like they never have before, going to Europe, having insane lifestyles, and the bottom are on food stamps, are going to food banks. The gap is too large, and that's what they care about. So they're not stepping in anytime soon. In fact, this is precisely the outcome that they're looking to see happen, which is a cool off completely in the economy where they can break inflation, they can bring prices down, and hopefully bring back some jobs. And then in the process, they know that the investor class is going to deal with it in the meantime. So as we look at our charts here, you can see a very simple range, right? You have this prior high right before Liberation Day. Bitcoin got up to about 88,300 or whatever. This wick. If it gets above there, we're bullish. You should be all in the markets. I'm going to be all in the markets. That's a huge sign if Bitcoin somehow just busts its way right up here and starts making its way onward and upward. That would be insane strength. But in this region right here, just under there, that's your trappy region. That's where you'd be looking to sell stuff, get into shorts, because, that's when you'd probably come back down here and probably test the lows. So that's probably my strategy, which is if we get a little bit up into this region, I'm going to be looking to sell or get into some shorts. And if we come down here, I'm going to be looking to buy as close as I can to this bottom here, not with my whole stack, but I'm going to start my DCA because this is good value, right? This is some good value in the zone, and chances are that this range might hold. And even if we get a big stock sell-off on Monday, which could happen, or throughout the next few weeks and months, I believe Bitcoin has mostly front run a lot of this. The stocks are down, 15% or so, but Bitcoin is down at today's value, 23%, and at its lows, it was down 30%. So Bitcoin has gotten ahead of a lot of this, but that doesn't mean that it's ready to run just yet. In fact, I wouldn't be surprised to see us, if these ranges hold, then obviously DCAing now is good, but obviously I'm open to the fact, and I want to have cash on the sidelines if we get down here. If we get below this blue line, I'm going to be buying heavily because you have intergalactic levels of support here at about 74K. This is that prior all-time high that we spent, 6-7 months trying to break. I would just be shocked if Bitcoin doesn't have a ton of buying activity around there. So below this blue line, you are looking at extreme value by getting in down here. And I would say the same is if you're looking at some of the biggest altcoins, Solana at $120 is great, but under it is phenomenal value zones. Anything under here is looking really good for long term. So Sol, I'll be looking to get into if we break down here. Obviously, you're not doing badly in here in this 120 to 150 range. You're still down, pretty much huge, almost 50% down from when we exited Solana. But this would be the real super value zone to get into between 80 and 100. That would be the dream zone that I'd be looking to get into if we are so lucky as to get it. Looking at things like Coinbase stock, which actually track Bitcoin performance a lot more closely, you can see it bounced off of a pretty significant support here. This is the support that it used back in September of 24. You can see it bouncing off that right now. But I do want to say it's broken down below this channel here. It had this kind of like broadening wedge that it had created over the last several months. It's broken through that. And so again, these charts can take some time to heal. But the one thing that I want to be clear about is whenever Bessent and Trump feel like they've done enough damage, whenever this liquidity crunch starts to go the other way, crypto is going to be the fastest horse and it's going to explode upwards. So my goal is to do two things. You could kind of just sit this out and be like, oh, I'm just going to wait until the signal. That's one way. But I do think DCAing during real panic, if there is even more pain, if, for example, China comes back and starts doing revenge tariffs and the market freaks out and lurches lower again, I could see this being huge opportunities. Because in the end, the case for Bitcoin is made even stronger in times where nations are not getting along and there needs to be neutral assets. Are you going to invest in China? Are you going to invest in Europe? Are you going to invest in the US? All of those markets are getting dramatically pushed and pulled into uncertainty by this trade war. And The one thing that's not getting pulled into uncertainty that we know exactly what it does is Bitcoin. And we finally seen Bitcoin fully complete its retrace down to the global liquidity bottom, which should more or less be around these levels. So if you're asking me, I think Bitcoin is starting to look like it's really in a value zone. I'm definitely looking to start adding allocation a little bit in the high 70s, but I'm open to it going lower, and I want to have some powder there in case it goes lower. And in general, I'm just looking to try to find a bottom here in Q2, as I do believe that we have a high chance of this being the bottom for Bitcoin and crypto for the next few years. And while we might not just V reverse bounce out of it, I'm starting to feel that risk reward turn to the other side. Seeing what Trump and Bessent are doing, again, we don't know how long they're going to stick to this plan. It's clear that they're focused squarely on the middle class, the lower class, lower income folks. And equities, they've been on a sugar high. So it could be several months of pain in the markets. But I do think, even though I can't predict exactly when we reverse out of this, the value that we're seeing here over the next few weeks and months will be phenomenal. Now, if you're not using a VPN, I highly encourage you to get one. It is the simplest and easiest way to protect yourself online. I don't know if you've been hearing about this, but there's been rampant amounts of cyber attacks going on through crypto, and it only seems to get worse over time. The best thing you can do is to protect yourself by anonymizing your IP right now. It only costs you a few dollars, and I personally use NordVPN. It's one of my favorite products, and that's why I'm proud to partner with them. They also have some super sweet added benefits, allowing you to get real-time threat protection and also stop things like man-in-the-middle attacks, which can happen if you connect to Wi-Fi, say at a hotel or a cafe while you're traveling, while you're on vacation, maybe somewhere beautiful, maybe somewhere cheap in the bear market. You essentially pay $2 a month. It's got a money-back guarantee, and it keeps you extremely safe from a ton of vectors of cyber attacks. I highly recommend this product. I've been using it for years, and you can get a big fat juicy discount by using my link in the description below. Once again, thank you to NordVPN for sponsoring this episode. Well, that's it for Tariff Palooza 2025. It very well might have been that Liberation Day marked the bottom, and things are getting better from here. If you enjoyed this video, make sure to check out this one popping up right now.